Well, good afternoon, everybody. I'd like to, first of all, thank you for coming out for the fall fiscal update. I'd also like to introduce my Deputy Minister, Denise Hanrahan, as well as ADM Craig Martin from the Department of Finance. Today's update is sometimes referred to as the mid-year update. It provides a snapshot of our current fiscal situation near the midway point of the 2017-18 fiscal year, ending March 31st of 2018. It's an opportunity to examine how we are tracking against the projections from previous budgets, and it provides insight into our course for Budget 2018. In Budget 2016, our annual deficit was for 2016-17 was forecast to be $1.8 billion. In Budget 2017, because of reduced expenditures and improved revenue, the anticipated deficit was revised to $1.1 billion. The public accounts have confirmed this number. We are seeing that the plan that we've put in place is working. Today, we are 99% on target with revenue projections at budget. There have been several challenges. One of those challenges is overcoming this province's dependence on oil. Just to highlight, in 2010, oil made up approximately 30% of our budget reliance. It was poor planning to rely on one source of income, and it is proven to be unsustainable. Today, oil makes up approximately 10% of our forecast revenue. This government has been working diligently to reduce our reliance on oil revenue and to diversify our economy through investments in infrastructure, in business, and in industry development. As we are able to afford to reduce the temporary taxes that were put in place, we will do so. We've already reduced the temporary gas tax by 8.5 cents, and there will be an additional 4 cent reduction on December 1st. Turn your attention to slide 2, the economic forecast indicators. Turning to our current review, let's first look at some of the indicators we use for our economic forecasts and how they have fared to this point. Economic indicators are mixed, with some improved slightly over the budget forecast. Indicators whose outlook have improved since the budget include real gross domestic product, household income, and retail sales. On the other hand, some indicators that haven't met projected targets include employment, overall project investment, and capital investment growth. With this in mind, let's look to the current fiscal forecasts. And I'll refer you to slide 3, the fiscal update for 17-18. As I've mentioned, our deficit forecast at the beginning of this year was $778 million. As of today, our revised deficit forecast for this year is $852 million, or $75 million above the original forecast. This represents a difference of 1% of gross revenue. The main reason for this change is decreased offshore royalties and a decrease in personal income tax provided by the federal government, partially offset by increases in corporate income tax and mining tax. The volatility of oil prices continues to be a fiscal challenge for our province. This is a key input to what we continue to monitor in our forecasting. I'll refer you to slide 4. I would like to note some of the more significant changes with revenue. Lower offshore oil revenue, or royalty, is the primary contributor to revenue decline. This reduction is primarily a result of lower oil prices combined with a higher exchange rate. This has been partially offset by increased production. The federal government overestimated the 2015 income tax base data to a number of provinces, ours being one. And for our province, this has led to a reduction of $100 million from the original forecast. On the other hand, corporate income tax and mining tax revenues are up. As I noted earlier, volatility of commodity prices continues to pose a challenge in forecasting revenues. Controlling our expenses are where we as a government can take real measures to address the province's fiscal realities. In core government, meaning government departments, we have exercised a smarter, evidence-based approach which has resulted in a more efficient public service. As you can see, there is a pronounced difference in spending between government departments, which is $22 million less than the budget forecast, and agencies, boards, and commissions, which are tracking $18 million above their forecast. Slide 6. Agencies, boards, and commissions, such as regional health authorities and Memorial University, currently account for approximately 60% of government expenses and almost 80% of total salaries and benefits paid by government. I have started conversations with these organizations, and those conversations will continue throughout the budget process. I am making my expectations to these agencies, boards, and commissions very clear. They need to find cost reductions and operational efficiencies, as we did within departments. Government departments are moving in the right direction, and it is time for other government entities to join us. To that end, I will be introducing legislation that will ensure that these entities are more accountable, that these entities find efficiencies and practice attrition measures. Slide 7, gross expenses. As you can see, over half of government's program spending is directly related to health and education. We must be willing to look across the entire public service to find efficiencies and to ensure that spending matches the priorities of Newfoundlanders and Labradorians. We recognize that there is more work to be done. I have been clear in my recent comments that we have a spending problem in government, including our agencies, boards, and commissions. And it is a problem that must be addressed. The projected oil royalties for this year are significantly lower than that originally forecast. In recent weeks, the price of oil has maintained fairly steady above $60 US a barrel, and we hope to see that trend continue. However, based on the first 6 months of this year and the advice of our 11 industry forecasters, we are taking a calculated approach to forecasting the price of oil. Our new revised forecast for the remainder of the year is $56 US a barrel. With this revised price projection, in conjunction with the actual price that we have seen for the first 7 months of the year, we now set our fiscal year average at $53.50 US a barrel. This chart shows you the impact that even minor changes in oil prices and exchange rates can have on our provincial oil revenue. It is important that we are realistic with our forecasting. We know all too well the volatility associated with both oil price and production. Other key fiscal indicators. Turning to other indicators, government's borrowing requirement for this year is now estimated at $700 million, an increase of $300 million from the budget projection. This is the result of an increase in Nalcor's equity investment and decrease in cash revenue receipts, primarily Nalcor. It is worth noting that the net debt has improved, but is still the highest per capita in Canada. Just to recap, the results of this fiscal update are encouraging. We have held expenses and are within 99% of revenue projected at budget time. The province still faces challenges. And let me be clear, our fiscal situation is still unstable and spending is unsustainable. We must continue to take measures to return to fiscal stability. In spite of this, government remains on track. We will continue with a balanced approach where we focus on delivering programs and services that are important to the public in a smarter and more efficient way. Challenges lie ahead, but our government will continue to evaluate our approach and to change it as necessary to build on the progress that we have made to date. To that end, I would like to announce today that in the coming weeks, we will be launching our pre-budget consultations. In previous years, the consultation process started in January of budget year. We have heard feedback from the public. They want earlier engagement in the budget process, and in response, we will be starting the online portion of consultations this year with in-person sessions to come in the new year. In closing, we did not get into this fiscal situation overnight, and there are no easy solutions. I wanted to point out again a statistic that I've pointed to on a number of occasions. In December of 2015, the deficit projection was $2.7 billion, which meant that the projected borrowing to fund the deficit alone was $4.38 million per day. We were borrowing, on average, a projected $4.38 million a day just to deal with the deficit. In November of 2017, the deficit projection is $852 million, which means we have a projected borrowing on a daily basis of $2.3 million per day. We have made great progress. We will continue with our plan in hopes of continuing that progress. Our plan is working, but we need to stay focused. We need to reduce spending because borrowing $2 million a day is simply unsustainable.